Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, we had a little bit of a pullback, but it was warranted after such a beautiful last 6-7 days of rallies in a row. And we were approaching overbought conditions on a few of our shorter term time frames, such as the 4-hour, overbought conditions on the SPY, overbought conditions on the QQQs, and even our other larger segments of the market, financials, and even healthcare and semiconductors too, right? Everything pretty much overbought across the board. So a little bit of a healthy pullback, guys, and we were expecting that, right? The move up can't last forever, but we have to be happy in the fact that we've just reached new all-time highs over the course of the week after pretty bullish comments from Jerome Powell, and also after a fairly decent inflation report too. So in today's video, guys, we're going to cover a few things. I have one earnings report prepared for you guys, and that's going to be Walmart. They came in with earnings this morning, so we'll go over them very quickly and see how the company did. And then tomorrow we'll be doing Applied Materials and most likely Take-Two Interactive. We're going to be doing those tomorrow after the close. Don't want to do too much in today's video in terms of the earnings, not put everything all together at once, kind of space them apart a little bit. And then after that, guys, we're going to go over our technical analysis rundown in our major market indexes and our big tech names. And lastly, wrap it up with my portfolio to see the few trades that I rearranged for today into the tomorrow session. And then tomorrow we'll do a full portfolio recap of how the week went, of course. So without further ado, guys, let's get right into today's video. SPY down about 0.21%, QQQ down about 0.2%, but financials and healthcare did drop a little bit less. On the one-day relative performance, you can see, guys, really stark contrast to the days that we've been having prior, right? Where there was just a bunch of green. Now it's just a little bit mixed. The market's pulling back, completely healthy market action, in my opinion. Big tech largely, kind of mixed here, right? Not too many tremendous losses, but still relatively red across the board, except for Google. Healthcare was fairly mixed as well. Financials fairly mixed as well. And your outperformer on the day really was Walmart after their fantastic earnings. The bottom half of the market also fairly mixed, right? On the one-day relative, you can see that even better. We did have significant red in the markets today, but not massive red, right? Just a very healthy, soft pullback, in my opinion. Consumer defensives led by Walmart, majorly up, of course, and communication services was up too. That was largely led mostly in part by Google's performance too, which was offsetting the red from Meta, as Google does have a slightly larger market cap than its competitor, right? So now with that out of the way, let's get right into Walmart earnings to begin this off with. And you're going to see, guys, it was a very good quarter for Walmart. So the story leading into Walmart earnings, right, has been one of consumer discretionary spending. Obviously, guys, right, people have been having less money because inflation's been high, interest rates have been high as well. So consumers are a little bit pinched on how much they can spend in large brand name stores. That being said, Walmart is known for its value proposition for consumers, and they do tend to weather economic slowdowns better than most companies. So leading into this quarter, it was going to be a case of whether or not they would be true to their history, and can they weather the inflation storm as well? Well, in this quarter, seemingly they really did, and also expanded a few other lines of businesses that we touched upon on last earnings together, namely their advertising business and their Walmart Plus service, which is kind of like a premium membership to Walmart, similar to what you would have at Costco. Now, in terms of their numbers, guys, very healthy beats across the board. 14% beat on EPS, smashed it. Usually Walmart does not beat by such a wide margin on EPS, and they did have a nice little beat on revenue as well by about 1.22%. And if you're wondering why the price of Walmart stock is only $60, well, just remember, guys, they just went through a stock split, right? A few months ago. And that most recently took action here in the past few weeks. And that was a 3-for-1 split. So the stock was trading right around $180, $200 before the split. And now we're right around the $60 range. So a bit more manageable if ever you're looking to play some short-term options on this stock. Now, in terms of the fundamentals, guys, I mean, Walmart, they're one of the biggest companies in the world. And as a matter of fact, they do sell the most amount of stuff in the world. This company has the highest grossing revenue of any company in the world. You can see last year here, they generated about $650 million. The runner-up is Amazon, but they're even bigger than Amazon, guys. Amazon last year only, 575 billion, right? So Walmart is still in that first position. In terms of their financials, really nothing bad to say about Walmart. This company has never been one to drive for bottom line margins, right? They've always hovered around the 2-3% net margin rate. So that is what we continue to expect from them. They're kind of like Costco, right? They don't really care about bottom line net income. Their only purpose is to drive the most amount of revenue as possible and really corner the market for all consumers and retain their status as the number one retail slash wholesaler in the entire world, right? So looking very good. Let's take a look at some of their numbers here, guys. Walmart surges to all-time high as earnings beat on high-income shoppers. So they're attracting a more high-income shopper right now. Maybe those high-income shoppers, trying to price themselves into Walmart now. Maybe before they were shopping for their groceries and other apparel at different locations and paying a premium, but now maybe even the higher-end consumers are coming into Walmart and substituting some of their higher-end purchases for more affordable products as prices still do remain high right now, right? Very nice. And on e-commerce gains. E-commerce has been a business that Walmart's been working on now ferociously for the past 2 years, and it's finally starting to pay dividends for the company, looking very good. So the discounter said it made gains with high-income shoppers and reported e-commerce growth of 22% for its U.S. business. That is very, very good, guys. Double-digit growth for Walmart at the size that they are. They're really starting to get a little bit of market share of that whole e-commerce segment. Now, the CFO, John David Rainey, told CNBC the gap between the price of cooking at home and eating out is helping Walmart's grocery business. Well, obviously, because food is more expensive now and people are shopping for deals, and Walmart definitely brings you those deals. So let's move further. Walmart on Thursday topped quarterly earnings and revenue expectations, as we saw, and as the discounter made significant e-commerce gains, drove profits with newer businesses like advertising and won over more high-income shoppers. Very, very good for them. The big box retailer said it now expects to hit the high end or slightly top its previous full year guidance. This is what we want to see from companies over this earnings cycle, guys. Not only beating this current quarter's estimates, but raising guidance. That's when you get the nice share price increases after your earnings if you increase the guidance. So we've seen that time and time again so far this quarter, guys, where companies have had great numbers, but if they did not push the yearly guidance higher, their stock price would remain flat or even drop. Walmart not having their problem, actually coming above and reiterating above their full year guidance for prior, right? So very, very good. They were expecting net sales growth of 3 to 4%, and now they've said that that's going to be even higher. So very, very good beat for Walmart. The CFO also added, shoppers appreciate the convenience that Walmart offers. For the first time, its delivery business surpassed its store pickup in terms of volume. That is huge. I did not know that, guys. It's very, very nice for Walmart to be doing this, right? We've got customers that are coming to us more frequently than they have before, and newer customers that we haven't traditionally had. And they're coming into a Walmart, whether it's a virtual store online or whether it's one of our physical stores. So obviously, guys, they make more money on their delivery business, right? They mark up the price of items ever so slightly if they're going to deliver it to you. And then obviously they'll charge you a delivery fee unless you're part of their Walmart Plus subscription plan, similar to Costco. Then you get discounts on deliveries, and sometimes you even get the deliveries for free, right? So the company is able to make more money on deliveries than they are from actually bringing people into their stores. So this line right here is a very, very big one for Walmart. Now let's move on further. As the nation's largest retailer and private employer, Walmart is often viewed as a bellwether for the U.S. economy. Yet it has generally fared better during an inflationary period than other retailers because it sells staples like groceries and has a value-oriented reputation. Obviously very logical. Same-store sales for Walmart US climbed by 3.8% excluding fuel. That is very, very good, guys, right? Anywhere between same-store sales growth, whether you're Starbucks, Walmart, Chipotle, any company that has foot traffic, right? You always want to see between 3 to 4%. That is the average. When companies are posting 5, 6, 7% boosts in same-store sales, especially when they're mature companies, that is significant outperformance. So 3.8% is right in line with the average of retailers, guys. Now, same-store sales, you can see that here, right? Prior, they had huge increases in same-store sales throughout the time when money was cheaper and a lot of people had excess savings. But as you can see, as we moved in here to our inflationary period and people pulled back their spending, you can see the decrease in store traffic, right? So that is a little bit of a drawdown for Walmart, but still a very healthy number. I would tend to argue that this, although we don't see it on the charts, guys, this is pretty much similar to how they were prior to the pandemic. So really returning to pre-pandemic norms. Now, e-commerce sales shot up by 22% year over year for Walmart US, fueled by store pickup and delivery of online orders, as well as the company's growing third-party marketplace. If you don't know what their third-party marketplace is, guys, if you go on walmart.com, you will literally be able to find anything there, right? iPhones, iPads, stuff like that. Usually Walmart does not sell those. They do sell a little bit of Apple products, but I'm talking about the larger products as well, right? So usually they don't sell that. What they've done now is they've enabled a third-party system similar to Amazon, where other sellers of items can list on Walmart's marketplace, and obviously Walmart collects a little bit of a fee for that. So that's what they're talking about when they say third-party marketplace. Transactions rose 3.8%, and average ticket was flat compared with the year-ago quarter. Here is the bump in your e-commerce sales, looking quite decent here, guys, right? They had a little bit of a rough patch back here, but now really coming back, and this segment of their business is really well alive for them right now. Wallets are still stretched, however, and this is what we're going to conclude on, guys. So because they know the consumer is still pinched for money a little bit right now, he said the company, the CFO, of course, he said the company has increased rollbacks, aka discounts, price reductions on specific items that it typically advertises on its website or with signs in its stores. Even so, the discounter has noticed the impact of inflation, as its shoppers have been selective with purchases. Rainey said customers' wallets are still stretched. He said shoppers have bought less general merchandise, such as home goods and electronics, as they prioritize spending on food and health-related items, a trend that the company has seen for the past several quarters. This is nothing new, guys. All of your major retailers have been saying the same thing, right? Walmart, Target, Starbucks, companies like Nike, right? Lululemon, anything that is consumer discretionary, meaning that the consumer does not truly need, right? So clothing, apparel, furniture, electronics, stuff like that, right? People pulling back on that spending, but in terms of the value-oriented essentials for life, right? Think beauty products, health products, shampoos, soaps, stuff like that, food, Walmart's doing really well on that. Now, still, even the low-income consumer seems to be holding in there pretty well, said the CFO. He added that sales, even in general merchandise categories, improved year over year. So really coming out of that decline, consumer retail sales may be starting that slow process of recovery here, guys. So that is what we want to see. And you need to trust Walmart when they say that, guys. Why? Because I just told you, they sell the most amount of stuff in the world. So when they tell you that the consumer's discretionary purchases are starting to come back, you need to take that and we need to listen, right? So in terms of the company's valuation, guys, very beautiful quarter, very nice comments from the CFO as well. In terms of the share price, well, obviously, guys, we are currently at the all-time highs right now, right? So we want to see whether or not the stock is cheap or slightly overpriced. Now, they do have decent revenue growth, 3.9%, right? The company is so big, you can't really expect them to grow this by double-digit numbers every year. That would be insane, right? So 3.9%, not too bad. The EPS growth still being at double digits, that is very good. That gives them a 2024 forward PE at $64, the current price of 26.77. In terms of this number alone, if you would see this number alone, you would say, that's not that bad. It's not too expensive, right? That's why we use the PEG ratio. We divide the PE by the EPS growth. It gives us the PEG ratio. We can compare different companies amongst each other. Anywhere under 1 is cheap. Between 1 and 2 is okay. Over 2 is expensive. So Walmart sitting at a 2.5, definitely not the cheapest that the company has been. So unfortunately, even though the company is doing very, very well, it's just not a buy for me. Now we'll compare that with Amazon. I know it's not exactly the same business, but just to show you guys another company that's at the all-time highs as well, look at Amazon's PEG ratio. Now I know it's obviously $5 higher than the analysis we did, but that shouldn't move the needle too much, right? Maybe about 3%. So their PEG ratio is a cool 1.63%, much more manageable. So if I had the choice to go between two retailers, between Walmart and Amazon, based off of fundamental valuation alone, Amazon is a cheaper company, even though both companies are at their all-time highs. So hopefully that makes sense, guys, right? It wouldn't really be a buy for me. I may consider a swing trade if for whatever reason we start revisiting these levels, tapping this prior support level right here, $61, $62, could be a nice little breakout, retest and run. This would be your entry. This would be your stop loss, and you just maintain the trade, right? So that would be a nice little trade idea if ever Walmart does pull back, just because it's such a solid company to be making these style of swing trades on, right? The company really just continues going up despite economic trouble sometimes in the overall economy. Walmart usually does very, very well. So that's pretty much everything for our earnings analysis today. Now let's jump right into our technical analysis. Excuse me. And we're going to start off with a bang. We're going to start it off with our S&P. So S&P 500 curling over a little bit, right, guys? How do we know that your daily move is topped out? Well, we need to watch for the loss of the hourly trend. And now your hourly trend is lost, right? Loss of the lows. Maybe expecting the bears to do something like this. If they set up the hourly downtrend, then we're just really looking out for our daily higher low pullback, right? So at this point, guys, anything above 520.23, just looking for that daily higher low for further trend continuation. Now, keep in mind, we're above the all-time highs. 524 is your first. I really got to draw straighter lines, right? There you go. There's a nice one. 524 is going to be your first stop. And if ever we get below that, well, you do have nice moving average support. Even if we break down, guys, daily downtrend and weekly consolidation, something like that next week, look how much space we've created on the weekly, right? Totally engulfing move. We do have tons of space, guys, that even if the daily goes into a little bit of a downtrend, something like this, just looking for a weekly higher low for further trend continuation. No red flags. Bullets control all time frames right now. Control the monthly, control the weekly, gorgeous engulfing move, and now they're fully in control of the daily time frame as well. So really no red flags whatsoever. Moving on to QQQs right now, same analysis as well, well above our all-time highs, and we'll put that line right here additionally, right? 448 is going to be that level that you're looking for the retest of the all-time highs. Gorgeous, gorgeous, gorgeous daily uptrend here, guys. Nothing bad to say. Your daily higher low is even further down on QQQ, right? 437.41. Any move lower, just going to be for a higher low for further trend continuation, right? And we do have a nice little area of support right here, 448 for the first touch, and a little bit below us are our moving averages. Now, if ever we roll over something like this, is it that big of a deal? No, because the bulls are back in control of the weekly, fully engulfing move. Any move lower is just going to be looking for that weekly higher low, anything above 412.50. So much space for the weekly higher low for further trend continuation. Same thing as SPY. Bulls fully in control of every single time frame. Monthly, now back in control of the weekly, and now still in control of your daily time frames, guys. So a little bit normal. We are overbought conditions on a lot of these indexes. So just a normal little day of healthy pullback. And even if the pullback continues in tomorrow, guys, I've just explained we have so much space. I really wouldn't be too worried about anything just yet. No red flags. Now moving on to XLF. Financials also performing fairly decent on the day. Flat day for them, right? A little bit of consolidation, kind of mustering its head right now, right? So looking for that daily higher low, anything above 40.2, just looking for that daily higher low for further trend continuation. We do have our moving averages above us too, below us. And we do have this whole red box, guys. What is this red box? It's your previous area of all-time high. Now that we're above that, should be able to use it as support if ever we do pull back into this fashion on the daily. Let's say we lose this daily uptrend. Let's say we don't do this and just set a daily downtrend, right? Still, no big deal. Tons of space on the weekly, anything above 40.2. Just looking for that weekly higher low for the trend continuation, guys. Tons of space, big support area. Our 12 EMA is curling up right down there. And you can see how well we've respected the 12 EMA since the start of the rally in November. So no red flags on financials. Moving on to healthcare right now. Healthcare pretty much same concept, right? Down about 0.12%, really inside yesterday's candle of trading. So if ever we were to have a little bit of a pullback here, guys, any move lower, anything above 143.17, just looking for that daily higher low for the trend continuation. Now we're above our key level of support. We just broke through it, 144.68, and we are still above our moving averages too. So nice little pocket of confluence down here, 145 down to about 143. Going to be tough for the bears to get through that, in my opinion. Now, if we do pull back a little bit lower, daily downtrend consolidation, just gonna be looking for a little bit of a weekly consolidation here. And even though this index did not engulf the all-time highs like our prior ones, they are still well underway to trying and reset this weekly uptrend. Weekly downtrend was in motion. The size of the bounce now is very, very adequate. That you can use the fib on to gauge how good the size of the bounce is. About an 80% bounce. When we get over a 60% bounce, guys, the probabilities favor the the bulls for the weekly trend change setup. So all in all, looking very good on healthcare. Really appreciate the size of the bounce as they were lagging severely behind in this prior area. Moving on to SMH semiconductors now. Semiconductors not looking bad either, right? Gorgeous daily uptrend. Still just looking for a daily higher low, right? Soon as this move comes down, looking for the daily higher low, anything above 218.75. Once again, I'll remind you, we said it in the previous chart, how do you know that consolidation is underway? You lose the hourly trend, right? You lose the higher highs, higher lows, higher highs, lower lows, right? Then you can set up for the downtrend, and then you can get your daily consolidation. So much space though, right above 218.54. Would not be nervous for the bulls at all. We have this gorgeous area of support that we're coming into right now. That is pretty much 220 to about 223, and all of your moving averages are right there too. So really a lot of support for the bulls beneath us. In terms of the weekly, we had the weekly downtrend in favor of the bears, and now the bulls have fully engulfed this, similar to SPY and similar to QQQ. So even if we do get a little bit more of an extended pullback here, daily downtrend, let's say, well, just going to be looking for a weekly higher low for further trend continuation. And if ever we pull back too much, guys, just target this little green box right here that we've left on the charts for a few weeks now, right? 217 down to about 210 seems to be the likely area of pullback for your bulls. Maybe tap the EMAs, tap your prior support right here, and then just put in another beautiful leg. Keep in mind, the biggest catalyst for this one is going to be NVIDIA earnings next Wednesday. Now, moving on to IWM Russell, growth stocks as well, pulling back more than most today, 0.72% to the downside, but that's okay. Anything above 202.58, still just looking for that daily higher low for further trend continuation. If ever they fail it and set the downtrend, you guys know the drill by now. Look out to the weekly, and then we know we have so much space on the weekly, just looking for the weekly higher low for further trend continuation. 12 EMAs right down here, and our big red box, right? Prior support, big resistance for about a year and a half. Now that we're through it, should be able to use it as support and maybe try attacking this 212 level if we cannot get through it in one clean shot. So not looking too bad on the Russell, just a byproduct of pulling down with the rest of the markets. And now our last index, the Dow Jones. So the Dow Jones, monster move on the Dow Jones, right, guys? Crazy rush up by the Dow Jones right here. So gorgeous daily uptrend. Any move lower is just going to be looking for a higher low, anything about 39,380, higher low for further trend continuation. Now, we didn't quite break out from the all-time highs. We were right there, but I wouldn't say it was a clean break. So if ever we do get rejected at this level, and let's say worst case scenario, right, consolidation, and then we get the daily downtrend. Well, you guys probably know the drill by now. Zoom out one time frame and see who's in control. The bulls have 100% engulfed this move back to the bulls, right? And then we just be looking for the weekly higher low and maybe gather a bit more momentum before putting in another leg towards the all-time highs. So all in all, looking very good, right? The expected scenario on all these indexes is the trend continuation. But the reason why I give the downside is if ever we don't respect it and come down, I want you guys to see that we do have tons of space on all of these weekly charts for a little bit of a pullback and then a retry at the all-time highs. So looking fairly good. Now let's move into our big tech names, guys. First, we're going to cover Apple. So Apple not looking too bad at all right now. Oh, excuse me, is the volume too loud? I hope not. So Apple not looking too bad right now either, right? Gorgeous daily uptrend after your earnings, and it just continues. So this move is getting a little bit hot right now. RSI on the daily cracking overbought conditions, and the 4-hour has been overbought now for quite some time. So if ever Apple does choose to consolidate a little bit, you guys know the drill. Anything above 181.29, just looking for that daily higher low for further trend continuation. We are quite extended off this 12 EMA, guys, and Apple is not really a company that stays extended from the 12 EMA on the daily for extended periods of time. It really hugs it very closely, right? So to see us so extended from the 12 EMA does lead me to believe that Apple will be retesting possibly the 186, 185 zone, maybe setting the daily higher low, something like this, and then potentially continuing to rally higher. Even if we were to lose the daily uptrend and head to a daily downtrend, you guys know the drill. Zoom out to the weekly. Weekly was a downtrend. We now have an engulfing move, and any move lower just going to be for a higher low for further trend continuation. If we get this pullback, guys, into the 180 range, it's going to be, in my opinion, the snipe of the century, right? We have huge support here, 180. Resistance will now be support as well, right? I know there's already a green box here, but I can literally draw a second box right here as my high conviction zone. And your moving averages on the weekly are all there, guys. 12, 26, and the 50, which is the pink line, all there. If we come back and tap this, it is going to be such a glorious trade opportunity. So that is the one that I'm looking out for personally on Apple myself. A little bit too extended right now for my liking to try and take a momentum continuation trade. Now, next on deck, we're going to cover AMD. So AMD looking pretty good, guys. We're actually getting that trend expansion that we were anticipating over the last couple of days. Looking very good now, right? Trying to break above this red box, which is your previous area of support, acting as resistance. And that area, guys, is as well your prior all-time high. So that is why we're getting rejected from this area. Fairly noteworthy area, in my opinion, right? Also struggling to break out of the moving averages, but it's okay. We now have a daily uptrend. We have not had a daily uptrend this entire time. So this is very notable to us, looking very good. So even if we pull back from here, looking for the daily higher low, and maybe we need to gather a little bit more strength before smashing this through this zone once and for all, right? But all in all, guys, looking very good on AMD, daily uptrend underway. which means that our weekly move is also underway. Weekly downtrend, leg number 3 was right here, very short leg, and now we've engulfed the move. If we can close like this on the weekly, guys, it'll be a weekly engulfing move, and then we'll really look to push the levels and maybe recapture this weekly uptrend. Best case scenario for AMD, in my opinion, mount above this red box of resistance right here, get above it on the weekly, sit down on it, use it as support, and give me that new weekly uptrend in motion. That would really be a case in point also to the monthly higher lows being set and on for the next leg up on the monthly. AMD still one of your more, I wouldn't dare to say undervalued, because the company isn't truly undervalued. We ran valuations on them when they had their earnings, right? So at 148, they're about 162 now. Down here at 148, PEG ratio was very, very cheap, right? Now at about 162, yeah, it's only about maybe a 1.3, still not that bad, but it's one of the stocks that's gotten crushed the most in semiconductors from the all-time highs, down still about 28%. In my opinion, still one of the better deals out there in the semiconductor market. So one of the trade ideas could be as follows. If we do come down here for the daily higher low, guys, trade opportunity might be live right in this pocket right here, talking about 152, 149, and then your stop loss would have to go below this location right here, 132. Right? So we'd be risking about $20, let's say. And the upside, guys, well, you'd be going for the all-time high reversal, right? TP1 would be right here at 188. So that would be TP1 about $38. That would be about a 2-to-1 reward to risk. And then your take profit number 2 would be all the way at the all-time highs, you know, anything above 220 region, which is probably going to be for a longer term swing. But the risk reward is definitely here on this trade. That is for sure. Now moving on to Amazon. Give me another quick second, guys. So Amazon just continues its slide to the downside, but that's okay, guys. We've been expecting that, right? Amazon did a great job of breaking out to the all-time highs, kind of double topped in this area. Now just looking for healthy daily consolidation, still hunting for that daily higher low. A lot of space still, anything above 174.60, looking for that daily higher low for further trend continuation, right? How do you know that the daily higher low is set? How do you know that this move down is done? Well, keep an eye on your hourly trend, guys, right? It's been an hourly downtrend for the most part. The bulls have made a few attempts at reversing it, right? You can see right here, but they just can't get the job done. So you need to line up a nice hourly uptrend, then you will know that your daily higher low is most likely set. Then we can start attacking these all-time highs. But as of now, still a lot of space. Now, if we were to do something like this, set the lower high into lower low, daily downtrend, is that a bad thing? No, because we have tons of support below us here, guys, right? Tons of support. This green box down here, which is going to be 175 all the way down to roughly 166. And your weekly higher low is all the way down there. So tons of space to set the weekly higher low and continue this gorgeous, gorgeous, gorgeous weekly uptrend that's in motion on Amazon right now, right? So no red flags at all. We do have a nice previous location from the all-time highs. That's this yellow line that I just keep on the chart, right? 175. Going to be tough for the bears to get back through that to the downside. Now moving on to Google. Google also looking fairly good today. 0.89% to the upside. Google's dominance of these charts just continues, guys. Gorgeous daily uptrend, right? Any move lower, just going to be looking for that daily higher low, anything above 165.50. Daily higher low for further trend continuation. Google is looking so strong. Your first touch line of defense is going to be that 12 EMA, so keep a close eye on that. And obviously your resistance is the all-time highs, right? 176.60 pretty much. Above that, psychological levels, 180, and then your 200 level is going to be the next area of resistance. Looking very good for the company. And even if Google reverses and takes a few weeks off, we are just going to be looking, guys, once again, for the weekly higher lows for further trend continuation. I know it looks a little bit weird, this candle formation right here, but just look at this as consolidation, right? Haven't really pushed above these all-time highs. If we break them, then yes, you can say your higher lows are set with the lows of these candles, and then we'll be looking further. But if ever we break down from here, right, well, just gonna be looking for that weekly higher low continuously and maybe tap this 12 EMA right down here at about 160. That would be the preferred trade location on me if I'm looking to play Google in the short-term future. Now moving into Meta. Meta also looking fairly good today, even though they were down 2%. Meta has done a great job at recapturing almost all of this earnings move to the downside. Your daily uptrend simply continues right now. Looking for the daily higher low, anything above 460.5, daily higher low for further trend continuation, right? However, if this resistance proves to be too strong for Meta, right, this 481-ish, and we drop a little bit further, cut this low right here, end up in a daily downtrend, is that big of a deal, guys? Not really, not just yet, guys. Yes, I understand that we are right now in the context of a weekly move down, and we are looking for the weekly lower high for the bears, right? This is the bears' attempt to set the weekly downtrend. I doubt they get it, but we're still just looking for the lower high, right? And in terms of the meta bounce is not as juicy as Netflix, only coming up about 50%. I would like to see them come all the way up to about 488, 490. That would give them a 62% bounce and a much better chance at having the success rate, right, of changing this back into the weekly uptrend. If you ask me, in terms of my gut feeling about Meta and just my analysis of the company, I am pretty sure, guys, that we're going to get this done, right? But to have the technical probabilities on our side too, would like to see the bounce get a little bit further. But even then, even if we kind of roll over from here, there is tons of space on the weekly. Anything above 415, going to be looking for that weekly higher low to reset the weekly uptrend, guys. If we get this dip right here on Meta, setting the weekly higher low, coming down maybe 450 or under, gorgeous trade location for Meta, guys. The entry is down here, stop loss is below the lows right here, and your take profit is, well, first all-time highs and then potentially even ride the rest just because their fundamentals are so good. Now let's move on to Microsoft. Microsoft also performing, red on the day as well as the rest of its big tech peers for the most part, right? But all in all, Microsoft looking fairly decent. So nice daily uptrend going. Any move lower, just looking for that daily higher low, anything above 412. Daily higher low for further trend continuation. Now, Microsoft is above two key locations. The top end of our prior range of consolidation, this is this yellow line, 415, and we're also above our moving averages too. So a lot of support down here for the bulls. Would like to see them tap this area and just continue this daily uptrend. Looking very good. Even on the weekly, guys, right? Weekly consolidation, tried to break out, failed breakout attempt with the earnings, and now we're trying to make a second attempt at it. But all in all, guys, looking very good. Weekly candles never closing below our range of support down here. All in all, this chart, even though it's been range consolidation, guys, for a better part of the entire year so far, right? This is the second week of January, and we've kind of been stuck here. The price action is still looking very bullish, guys. No red flags whatsoever. Any consolidation even lower, guys. If we come back into this range, still think it's a great location to pick up some Microsoft towards the lower end of the range. Now, moving into Netflix, Netflix also kind of curling over, right? What is Netflix trying to do? It's in a daily uptrend, looking very good. Let me just do this properly. Daily uptrend, we're looking for the daily higher low. Now, Netflix is just consolidating sideways. That's arguably the best case scenario, right? You would have a lot higher probabilities resuming the daily uptrend from the highs of the move, something like this, than if the bears pull back all the way like this and you're expecting this, right? So this looks very good for Netflix. Couple that with the fact that we are above previous areas of consolidation, right? Above our moving averages. We're above this previous support line right here at about 600, looking very good for the company. However, if we test and fail like this and send into, that was a bit too aggressive, and we send into a daily downtrend, something like this, is it that big of a deal? No, because the bulls on the weekly have done a great job of recapturing this earnings move. Loss of the weekly uptrend, now we're trying to get it back. And the bounce on this one is a lot better than Meta, even though the charts look the same. You can see the bounce came over 80%. So it really gives the bulls the best probabilities, guys, to be able to set the weekly higher lows and then get back into a weekly uptrend. No red flags on Netflix, looking very good as a matter of fact. Trade swing location, guys, if you ask me, still same thing. Looking for the higher low, maybe target the 12 EMA down here. 589 all the way down to about 575. This little pocket right here could be a perfect swing trade opportunity to be targeting prior 52-week highs and then eventual all-time highs over the course of the year. So looking fairly decent. Now moving on to NVIDIA. NVIDIA obviously has earnings next Wednesday, right? So not too many trading days left before next Wednesday, 4 trading days. So I'm not expecting significant moves from NVIDIA either way prior to their earnings, right? As a matter of fact, if the rest of the market takes a little bit of a breather and consolidates, we may even see a bit of consolidation on NVIDIA too. So that being said, in the context of this gorgeous daily uptrend, any move lower, just gonna be looking for the higher low, anything above 881, just looking for that daily higher low for further trend continuation, right? But with so few days of trading left before, and you know how volatile NVIDIA earnings can be, right? The stock can be around here, but still after earnings, it could be all the way up here or maybe even all the way down here, right? It doesn't really matter in the short term. We really need to wait for earnings. That being said, I would like to see NVIDIA range closer to these highs than towards the 850, because if you come too close to 850 and earnings for some reason are underwhelming, well, then you may retest the lower bound of this range, which would be 750. That would be a great trade location for some swing trades, but some people may just be disappointed, right? So the key is to be patient on NVIDIA and wait for those earnings. That being said, the weekly uptrend is still very good, right? And we do have a lot of space. Even if earnings are bad next week, guys, a lot of space above our 755 to really set that weekly higher low and just continue this weekly uptrend maybe further down the line. NVIDIA, I know it's not the same pattern, but NVIDIA can just consolidate in a big range sideways for some time as it grows into the valuation. That will be similar to what it did back here after their tremendous quarterly explosion that we had when the stock went from about 275 up to the mid 400s, right? So it could be a case in point. If NVIDIA earnings are underwhelming, I'm not calling for a tremendous drop, could just be a case in point for sideways consolidation. Now moving on to Tesla. Tesla also not looking too bad today, 0.49%, right? 0.5% to the upside. Tesla's still trying to get away from this daily downtrend, right? They're trying to set the daily higher low and break. A break of yesterday's high would mean that we are in a new daily uptrend and would also mean that we do have the weekly higher lows being set. And they need to set them quickly, guys, because we're running out of support levels. 163 to 160 is the bottom end. And if the bears come through this, they can possibly set up to reverse this back into a weekly downtrend and get back to levels that nobody really wants to talk about, right? So Tesla has to get their butts in gear pretty much very, very quickly, mount above 180 and start gaining the levels and really start giving this weekly trend change to the bulls some probabilities. Because as of now, guys, yes, the bounce was juicy, but we need to get that follow through. Have not had a weekly uptrend on Tesla since pretty much all the way back here. So it's been a very long time. It's been about 6 months, right? So need to get their butts in gear, but at least, guys, we are holding this lower bound of support fairly well. So I'm not giving up on the bulls just yet. It's just that they still do have a lot of work cut out for them. Trade location possibility, guys, could be if you're going, if you're trying to go for the daily trend change and you're trying to go target, you're trying to snipe the weekly higher lows for the trend change, guys, the trade location is pretty much here. It's here. Your stop goes below pretty much the 160 level. So you're risking pretty much $15. And at that point, guys, your take profit is the next level up here. So about $205. So you're risking about 15 bucks from 175 and you stand to make about double that all the way up to 205, right? So you stand to make about 30 and you're risking 15, 2-to-1 reward to risk. Not that bad of an opportunity in my opinion, but Tesla bulls still do have a little bit of work cut out for them. Now moving into Palantir, give me a quick second. So moving into Palantir, down about 0.09%, not too bad for the day, right? Still just hesitating here after their earnings move. Size of this bounce here, though, after earnings is not quite adequate. Dare I say, if the bears start rolling over next week, well, we may just be revisiting these lows, guys. And if we cut these lows, is it that big of a deal? I wouldn't really think so, guys. We still do have a lot of support below us, right? Huge area, 21 down to 19. We're in that now, support back there, resistance. So I do expect the bulls to put up a lot of support in these lower ranges. All in all, it's not lost yet for the bulls at this point, but you must agree with me, the size of this bounce is not very juicy yet, right? It's been about 8 days of trading since Palantir's earnings, and we've only been able to recapture 25% of the move. Not a very good bounce. Still struggling with these moving averages above us. What we need to see from the bulls is get me that daily trend change. Start pulling up into the 23 level. Then we can talk about the possibility of this weekly trend change back to the bulls. But as of now, still just heavy consolidation and also just monthly consolidation, still hunting for that monthly higher low to then be able to attack this $28 range, perhaps later on in the year. Still a very good trade location, guys. Writing short puts, $19.50, $19, very good value proposition down there. Now moving on to PayPal. PayPal also not looking too bad today, up about 0.31%. So that's a decent day for PayPal, right? PayPal's been trapped in this daily downtrend now, trying to reverse it, right? We would need a break of yesterday's high, 65.50, break that, and we do get the daily uptrend back. And then we also save this potential weekly pattern too, right? Because now we are in somewhat of a weekly tightening range. So if the daily comes back to the bulls, we may be able to start attacking some of these higher ranges of the weekly and really getting a weekly uptrend back in motion, right? We had it right here. And now, unfortunately, we've been in consolidation mode for a better part of the last 2 months. So PayPal's kind of just stuck here. Trade locations in terms of writing short puts, well, 61 down to 60 seems to be a juicy location, guys. Hugely contested area in the past. And you can see how well we've used this area as support as we've tried to pull into it time and time again, right? So those are the things that PayPal need to do. Still like this company, guys, but the momentum is definitely not there for the stock right now. Just really a lot of sideways consolidation. So that's pretty much everything we had for our stock market rundown. Now let's dive quickly into my portfolio and see the trades that I made for the day. All right, guys, so let's do a very brief portfolio rundown. Just going to show you guys the trades that I opened yesterday and today. We're not going to do the full portfolio rundown. We'll save that for tomorrow, but just going to show you guys as an example the trades that I took in the last 2 days. Amazon was one that I added. We added that for about 36 cents for the 180 puts. We wrote them yesterday in the afternoon. Only 2 days of trading left, right? So we can't really respect our 0.5% rule. It would just be too close. Fairly happy to get at least $36 on those. We'll see how those goes. Now, for today, as a matter of fact, what we did do is we closed a couple positions, right? You can see that the Babas, they were earnings plays. We closed them for pretty much 100% profit, right? Very, very worthless. We'll do the tally tomorrow as well. Close one of the GME contracts. We got those for about 55 cents, if I'm not mistaken. Close them at about 16 midway through the day. Very happy with that trade too. And the Walmarts, we took some Walmart earnings plays yesterday. You can see those right here. We wrote 2 contracts for about 25 cents at the 57 strike. 57 strike on Walmart was really kind of like your lower bound of support right here. So that was why I was kind of targeting this, excuse me, it's actually all the way down here, right? $57 range. That was right around here, right around your 200-day moving average for Walmart. Fairly good trade as well. And that's pretty much everything for yesterday's trades, I believe, that I closed that you guys may not have seen. The ones for today, we wrote the Applied Materials puts for their earnings. So Applied Materials did very, they didn't do great, but they didn't do bad in the after hours, right? So they are down to about 211, but not even close to being assigned, right? I wrote the 200 strike for one of them. 200 strike is right around this line right here. And then we wrote the 195s for next Friday, and that's right around down here. So tomorrow we should have a very good chance of not being assigned on the contracts we have that expire tomorrow. And then the 195s for next Friday, those would probably, a lot of the premium is going to come out of them, guys. If I can close these for 20 cents, 25 cents, I'll probably do that as well, right? We're going to take 75% profit in one day. No sense in holding the contract all the way through to next week. So that's pretty much it for those trades. Then we took one more earnings play, guys, which is going to be the Take-Two Interactive. It's not that I was nervous about this one, but gaming studios, guys, is not my favorite trade to take. That being said, there was decent premium for the risk. So we got about 43 bucks on those for the 130 strike for tomorrow, pretty much. So for 1 day of trading, fairly decent premium. And the level we went with is really those, that 130 strike right down here. The expected move was about 6%. We went about 10% away. So we did leave ourselves with a good margin of error. Now, they did have a huge drawdown in the after hours algorithms, misinterpreting the data that they had. Big miss on EPS. But similar to other companies we saw so far in this earnings cycle, it was a one-time aligned item that caused a net drop in EPS. And when the algorithms realized that, they bid the price back up to 142. So if we open, guys, tomorrow, 142, 140, 139, these 130s, guys, are going to be completely worthless as well. 130 on the chart, guys, very, very simple. It was almost 2 standard deviations of the expected move. And we were targeting the lower bound of prior support from pretty much this entire, year, pretty much, right? You'd have to go back to last summer to find these prices. So I figured that was enough space to work with the company. They are having some positive catalysts, such as the release of GTA 6 next year. So I wasn't expecting it to be too bad for them. So took the risk and was rewarded. So that's pretty much everything. We're going to do a full recap and full tally of all premium collected this week in tomorrow's video. But I just figured I should give you guys a quick little recap of the portfolio today nonetheless. So I hope you guys appreciated that. If you did, consider dropping a like on the video, guys. I've been trying to keep these videos a bit shorter, so let me know if you enjoy the shorter form content, guys. I know a lot of you have asked for it, and I've really been doing my best to trim down these videos as best as I can while providing still good value. And guys, if you're new to the channel, also consider subscribing. We do these videos every Monday through Friday after the close, and then on Sundays we do the top 5 options for the week videos. So if you like that type of content, please consider subscribing. And lastly, guys, if you have any questions at all, stocks, technical analysis, options plays, macroeconomic play, data, right? Anything you want to discuss with me or ask me, leave it down below in the questions in comments, and I'll be sure to get back to you within the first 24 hours usually. So take care, guys. Thank you very much for watching again. I'll see you tomorrow after the close. Take care and peace.